Hello, and welcome to the Swiss Money Secrets podcast, presented to you by WHVP. WHVP is a company that has been helping Americans move assets outside of the US for over 30 years. In this podcast, the listeners can expect to hear on subjects pertaining to offshore investment and investing outside of the US markets and the US dollar. Now, let's get into it. Hello, and we want to welcome our audience to the Swiss Money Secrets podcast. This is our rebranding of our podcast that we've been doing for 3 years. Jamie, you started, 3 years ago with the initial podcast just on Anchor, recording with some interviews. And now we're developed into a whole podcast studio and a new name now. And we've really been working on developing something that can be professional and that our clients can really see. Good quality content with good content from us, as well as bringing in guests. Last episode we had Jessica Schadler on from Swiss Capital Trustees, which was really cool. Today, there's been big movings and shakings in the U.S. financial system, banking system especially, and also the Swiss banking system. So before we jump into the topics of the differences between the U.S. banking system and the Swiss banking system and kind of the situation that's at hand or that we're both facing, we just want to talk about the news that happened, I think it was on Sunday, correct? The announcement of the merger of UBS and Credit Suisse. So maybe you guys could share a little bit more on that, announcement. It felt to me like a bit like a snap decision, or it happened really, really quick.
Yeah, it has happened very quick. So it was announced through a media conference that was jointly held between the Swiss Finance Department, so essentially the government, the Financial Market Authority, so the supervisory organization, UBS obviously, and Credit Suisse, and the Swiss National Bank was there as well. They have informed the public on Sunday evening, local time, that UBS is going to take over Credit Suisse. So there will be a merger. This has all happened extremely fast. I think 1 or certainly 2 weeks ago, no one would have expected that. I'm not going to go into a lot more details because we're going to cover it later on as well. But I think it's certainly the news topic of the week, maybe even of the year. Everyone here in Zurich is talking about it. I mean, Credit Suisse is a huge institution. It has a history of over 165 years. A lot of jobs are at danger or at risk. And it has been a big shock to everyone, I think.
Yeah. Urs, do you have any thoughts, on that news?
I can only reconfirm what Jamie already that it's kind of shocking. It is something that happened very, very fast. We have to wait and look what the consequences will be. I think the original intention to stop markets panicking out of a contingent of bank failures has been successful so far, but as we have seen in the past as well, it can change again very quickly. So we have to be very curious. We have to be attentive to everything which is coming up. We have to follow the markets very closely, and just see where it goes. Fortunately, we at WHVP have no relationships with Credit Suisse, which would be a threat for us or for the company or our clients.
Yeah, I think even further we don't even have a relationship with UBS either.
Yes.
And I think that's also something to make clear for our clients that they see this merger happening and they think, yeah, but okay, you don't have any exposure to Credit Suisse, but what about UBS?
Yeah.
Because they're essentially taking on that risk at the moment. But it's definitely a shock, and I think it was in part a little bit a relief, I think, for the U.S. banking system that they weren't the only one that went through a crisis. But as we transition now into really diving into the problems that were in in Credit Suisse, in the bank itself, and not in the systematic structure of the Swiss banking environment, and versus the US where we saw multiple banks collapse as opposed to one that was, dealing with some issues. I think it gave the US markets, or at least the media, a little bit of a breathing room, saying, oh, look, we can point the finger at someone else, it's not our problem. So Jamie, maybe you could lead us into this topic by talking a little bit about the Credit Suisse situation, kind of what led up to it. It felt like a snap decision, and it felt like a shock, but the shock was more of the merger and less of, the issues that Credit Suisse was happening. So maybe you could shed some light onto that for our listeners.
Yeah, absolutely. I think the first and very important point that you have already mentioned is the situation here in Switzerland, and the situation of our banking system is very different than the one in the US. And Switzerland as a country, our financial system is not at risk. We don't have a banking crisis here. We have a problem with Credit Suisse, which is an isolated issue that is not to be downplayed. It is serious, but it stems from very different issues than the problems that we see in the US. And I think there tends to be a little bit of confusion because it has happened very closely to the Silicon Valley bank collapse and other collapses that we saw in the US. But just because they happened almost at the same time doesn't mean that they are directly related. Of course, one has played into the other a little bit. We can get more into that. But the main difference in my perspective is, or maybe we can talk about the differences later. What has happened with Credit Suisse to start there is very early on, like maybe 10, 15 years ago already, they have moved quite significantly into investment banking, which is typically a more risk-taking business, I would say, than the typical Swiss private wealth management. I mean, we have talked about it in previous episodes. Switzerland is the leading manager of cross-border wealth worldwide. So a significant chunk of all wealth in the world is managed in Switzerland. This is what we thrive at. This is what we love to do. This is also what we as a company specialize in, and a lot of other banks. And I think the first change that we saw with Credit Suisse being one of the largest universal banks here in Switzerland, one of the two largest, the other one being UBS, is that they have moved away a little bit from like the typical risk-averse Swiss private wealth management or private banking more into the investment banking, where there's very high returns, but there's also very high risk. So that was just a little bit of a change in the culture and the change in the strategy. I think that is where this has all started. This has again been quite a time ago. So a little more recently, maybe the past, I would say 3 to 5 years, we have seen several problems in terms of risk management. We have seen problems in terms of corporate governance, and one peer crisis led to the next, essentially. So there have been various problems. There have been various scandals where Credit Suisse has not taken the appropriate risk measurements. And this, of course, has slowly started to chip away at the trust that the Swiss population, but also worldwide clients, have put into the bank. Now, even more recently, last October, there was one tweet, I believe it was from an analyst somewhere in the States, I believe, who has led to even more crumbling in the trust that people have placed into Credit Suisse. And obviously, banking, financial services is a trust business. So if you lose trust of people, that will lead to problems. And I think it's important to say that while Credit Suisse has lost trust of the public and its clients, it has still had quite stable balance sheets up until the very end, essentially. So they have had liquidity ratios that were good. They have been well capitalized, so it wasn't a problem in terms of them misjudging financial risks or having an improper balance sheet. It was really just them behaving in a way that led to clients taking the money out of the bank. So since October, they have lost about a quarter of all domestic assets that were held with them, which is, of course, a huge outflow of money, which has been a problem. And then when Silicon Valley Bank, when that collapsed, of course, people became even more worried, and they have lost trust generally in banks even more. So that has affected Credit Suisse as well. And yeah, so that has led us then in the past week or so, where we saw stock price of Credit Suisse go down by about 30% in a day or so, which is of course significant for any institution, and which has also been very bad for Credit Suisse. So Thursday last week, so it hasn't even really been a week, they have asked the Financial Market Authority and the Swiss National Bank to put out a statement confirming that they are in good shape or in okay shape to deal with what the market is throwing at them. They have received some confirmations that they're still on track in terms of their balance sheet. They have also gotten some backing that they would be covered. Certain amounts would be covered in case of problems at Credit Suisse, but that has then shown to be not enough. And then over the weekend, all those involved parties have sat together and have discussed, and it turned out Credit Suisse wouldn't have been able to continue its business operations most likely by itself, and there were several options on the table, and then in the end it was decided that UBS would merge with Credit Suisse, or essentially buy them. And yeah, I mean, it is a very sad situation. A lot of Swiss people took a lot of pride in Credit Suisse long history. I mean, over 165 years of being in business is a very long time. I believe they have about 17,000 employees in Switzerland, and a lot of them are in Zurich. So it is very sorrowful that something like that has happened. But at the same time, I think it's important again to mention what we have talked about before, that this is an isolated incident. It is not a problem of like the Swiss financial center, and then also that we as entrepreneurs think it is a good thing that it could have been solved in the private market sector, and that there was no government bailout required. The government is involved in the deal a little bit. They have spoken some insurances to just make sure that everything runs smoothly, but they essentially have not taken over the bank, which I think is a good thing. And then, of course, which is also a very good thing, is the operations run smoothly, so there has been no interruption in the business. The clients are not going to lose their money, which is, of course, one of the most important things.
Yeah, I think that's really important, and I thought the point that something that you brought up, discussing how Credit Suisse had lost 25% of their domestic assets, that wasn't a bank run on Credit Suisse. That happened over the past 3 to 5 years. So I think for our listeners...
Well, it has happened since October.
Oh, okay. So it has been...
So it has been...
More recent.
It has been a short amount of time, but it hasn't been a bank run in the sense that people rushed to the bank and took out everything within like 1 or 2 days, which typically a bank run would be like a few days. So it has been like half a year or so almost, which again I don't think would qualify as a typical bank run, but is of course a significant problem to any financial institution.
Yeah, I think that's a great explanation to have that, so that our listeners can really understand what time frame did that happen in, and as you mentioned, 165 years of banking, but if you destroy your trust, man, it can really topple giants.
Yeah.
And so on kind of going on top of that, we understand now the Credit Suisse situation. Urs, maybe you can shed some light on how this kind of differs in comparison to what's happening in the U.S. banking crisis. That's a little bit more systemically wide. I was having a conversation, just as pretext, I was having a conversation with a person that I know that was talking about how banks were trying to figure out how they could limit their exposure in the U.S. to bank runs. And so they were trying to come up with options of, do the people have to be in person to draw their funds out of those banks? And so they're trying to come up with quick solutions that they could limit people pulling money out of the bank account. So maybe you could kind of explain the differences of, I guess, the U.S. collapse and what happened here in Switzerland in the merger.
So yeah, as Jamie already mentioned, in the U.S. it was really more of a liquidity crisis, of a liquidity issue. So it was a misjudgment of the interest rate development. So what the bank basically has to do, they have to hold part of the funds in very liquid and very safe assets, which their clients deposit with them. And due to the regulation, government bonds are also counted as the most safe assets. But due to the increase of interest rates by the Federal Reserve of about 4.5% within 12 months, if you haven't had hedged or insured the interest rate risk, that could have led to a problem, and that was exactly what happened to the Silicon Valley Bank. So people started to withdraw money, so they had to sell their investments because they didn't have enough cash, and they had to sell the investments with a discount, so they experienced a loss. And when it came out, it turned into a trust crisis as well, where more and more people said, okay, I don't want to be the last one. And eventually, even if you gave your transfer order on Thursday evening, it wasn't executed anymore the next day. And this was where the FDIC, I think, stepped in and took over. And then eventually, also over the weekend, 1 week earlier than with Credit Suisse, the Fed and the US government decided that all the deposits are insured, even so usually it will only be 250,000. And the thing now is that people already have some kind of a mistrust against the banking sector, because from the great financial crisis they knew if it goes well, the bankers, they profit. If it goes bad, the government steps in, and eventually the taxpayer. And so since a lot of people do not understand how exactly a bank is structured and what risks are involved and where they are located in the structure, that leads to a situation where people took their money and going to the biggest institutions they can find, thinking, okay, if at all the government has to save them, so I will be better off to have my money with them. So turning it up to, or like going into the Swiss financial system, here it really is about Credit Suisse. So we also saw when people started to withdraw money from Credit Suisse, I mean, all the private banks which really focus on serving their clients with their custody services, they did not have an issue or a problem. It's more the other way around. They benefited out of it, that people who already had an account with other banks, that they moved the money to these banks or wanted to open another account with them. Yeah. And so it's really, as Jamie said, Credit Suisse is a specific case where we experienced over the last couple of years a very bad corporate governance, which led to the situation where we are in now.
Yeah, and that might be a good point of jumping in at why we have never worked with Credit Suisse as a custodian bank, right? Because we are very careful in the kind of banks that we select, and one of the parameters that we judge is, do they have a good approach to risk-taking? Do they have a solid corporate governance? And do they have a long-term approach to the business? Because we don't want to be depositing our clients' money with a bank that is just chasing the next quarterly return or what is it called, like quarter end performance, where they are just working towards getting more bonuses, right? So we typically tend to work with smaller banks that are ideally still like family owned and managed, because those banks where you have the managers being at the same time financially invested, you have less problems of excessive risk taking, because at Credit Suisse we had managers who were not invested with the bank, who essentially just took huge amounts of money out of the bank without ever having to pay for the downfall, and that I think led to a lot of the problems that we have. And we are, on one hand, we're lucky that we didn't have any dealings with Credit Suisse, but I think it's also fair to say it wasn't just luck. It's also that we have prepared for a case like that because we want to be associated with conservative financial institutions that focus on the Swiss private wealth management that we also provide to our clients, and that is in our company's DNA.
Yeah. Go ahead.
Yeah, no, that's absolutely what is very crucial, to focus or to be aware who or what do you want to represent and who do you want to work with. And so, for example, one bank we're working with, I mean, just recently again, in all this turbulence, I looked at their balance sheet, and I mean, they have about 6 billion assets they manage or they custody, and they have 3.8 million in mortgages.
Yeah.
It's like it almost can't go more conservative.
Yeah.
And of course they miss out on a lot of opportunities to make more and more money, but they have a longer term view, so they understand, okay, if we follow this, I would say, simple business where we create an environment, a space of safety for our clients' money, in the long term it will pay out.
Yeah.
Yeah. And I think if I may add one thing that's important that you mentioned now is like keeping in mind what you're representing. And I think maybe it's not clear for everyone, it might be, I don't know, but Credit Suisse has like the Swiss in the name, and I think that has also led to some misconceptions that Credit Suisse is like representing Switzerland, or that they're like the Swiss institution, or that they are like, I don't know, a government bank or whatever, and it's really just their name. Yes, they are in Switzerland, they have been in Switzerland for a long time, but they might as well have a completely different name. So they are not standing for the whole Swiss financial industry or center. It's literally just their name because it's not trademarked, I guess.
Yeah, and I think kind of along those points, even Jamie, how you had mentioned earlier about how, you know, Credit Suisse had moved away from that private banking more into the commercial investment banking side of things, or corporate investment banking side of things. We've seen in the past couple of years, even the other big bank, UBS, sell off their portions of their private banking business themselves. So even like with their EAM desk being sold off to another bank in Switzerland, because these banks, I guess, global institutional banks of Credit Suisse and UBS, really are merging or have went away from that base root, I would say, Swiss banking style. And you've seen it even in there, how they've run their businesses and even, you know, sold pieces of their businesses to focus more on something else instead of private banking. And I think I think these are all things that, one, show the strength of the Swiss banking industry. When you see that if they do sell, if a bank decides to move to a corporate, you know, investment banking, their private banking is usually absorbed by a different private Swiss bank. And so the system is still strong and is able to kind of, in the private sector, take care of its issues or strengthen itself or refocus. And at the other side, you know, it shows, I guess, the challenges that every market faces, and how do we become effective at what we're doing, and in what direction, again, this corporate governance, what directions do we go? And that's where we see, again, as you both have mentioned, that the big issue with Credit Suisse and what we've seen for quite some time with them. So I would kind of like to talk, I guess, from an American perspective on this issue. I use both banking systems. I use the US banking system and I use the Swiss banking system, and kind of what I've seen through this whole debacle. In both, I've not been worried about my finances. However, I'm not a billionaire, so I don't have millions and millions of dollars in each bank account. But I will have to say I was much more worried about my US banks than I was about my Swiss banks. In general, I didn't see the panic in the population in Switzerland of, okay, we saw this thing happening, we were disappointed about it, and even though the merger was kind of surprising of how quickly it happened, we all kind of saw it coming for Credit Suisse. You know, it was slowly eroding away at it, but where I have my banking, I wasn't worried about it, and I would say where I bank with as an American in Switzerland is probably not the best place, and it's not the custodian banks that we work with. I want to make that very clear, and I think that's something that, I guess for me, I was so happy to be in Switzerland when everything went down, because I was really not worried about, should I go and pull my funds out in cash? Oh no, is my bank, if anything, I thought about my US bank. I thought, man, should I move that money into Switzerland? Yeah. And I think that's the other part, is a lot of the deposits of Switzerland, or that Credit Suisse, that 25%, they, as you had mentioned, they were absorbed into other Swiss banks. Yeah. You know, it wasn't like they were taken out and moved overseas. And I think that really shows the strength of what the Swiss banking system has and the trust that it still holds for, one, its domestic population, and two, the international population, that, you know, we haven't seen the exodus of funds from Switzerland during these crises. And in the US, man, I have talked and spoken with so many friends and how worried they are about their bank and what are the options, how do we get out of the US, and the issue with the Fed and the FDIC getting involved with these takeovers. It's not political. These are non-political issues, but every time the government gets involved in the States, somehow things will eventually turn political, of how we saved this, how we bailed this out. I mean, still in the US today, we talk about the banking crisis in 2008, and it was, well, the Obama administration bailed out all these companies, you know, private banking, banking sector and other businesses. And so everything gets connected to politics. In Switzerland, it's much different because there's a very clear separation, even though the Swiss National Bank was involved in the deal. They're so far separate in Switzerland and in the system that, you know, there's no real talk about what the government's going to do in Switzerland. There's zero talk. I haven't heard any of it, and I think that's quite interesting as an American, kind of being on that perspective. And maybe Jamie and Urs, you guys can share kind of your Swiss perspective, how you felt, I guess, on a personal note through this issue. And what you've seen also from the outside of the US system.
Yeah, for sure. I'm happy to talk about the personal side of things in a minute. One thing I want to add on build on what you just said is, I think one of the reasons that the Swiss system tends to hold up more than the US is also because the regulation is different and we have higher like minimum liquidity ratios and requirements. And we see that one simple example is mortgages. You here in Switzerland, you have to pay down 20% of your mortgages. Like that's the absolute minimum. Banks oftentimes require or recommend more than that. And I think in the States you can get houses with almost no down payment. And I think that's just on a small scale, showing what's also the case on the larger scale, that here the regulation is really quite tight. And that I think also puts the Swiss population at ease because our banks tend to be very well capitalized. Now onto the personal note, I mean, I started my career at Credit Suisse many years ago. I started there as a young talent. I did like a 3-year program where I got to know 6 different departments of the bank. I've met many amazing people, and I think that's very important to also mention. Credit Suisse has some of the most talented and amazing employees, and my thoughts go out to them because it's an incredibly turbulent and tough time because they don't know if they're going to lose their job. Their employers is being shown in a very negative light in the public. So I think it's also important to keep in mind not just the client side, which is very important, but also the other stakeholders, namely like the normal employees, the middle management, who have worked very hard and have now have that taken away from them due to poor management of like the upper leaders. And but I think at the same time, you've mentioned a few times how fast this decision was made. And for me personally, I think this is also a positive sign of how well government and the private sector can work together if there's need for that. They're very separate entities. I would say, generally speaking, our culture here is to be a little less politicized than in the States, but I think it speaks to our system that when there's a need, we can make fast decisions and we can make entrepreneurial decisions and we can move forward in a solutions-oriented way.
Yeah. And Urs, what are your kind of personal, I guess, feelings or perspectives on everything that's been going on the past 2-3 weeks?
Yeah, I would also say that it's very sad. It's definitely not what we're hoping for, what we thought that will happen. But I mean, as Jamie said, I mean, it was a very short period of time, and I think it also by making a decision or coming up with a decision and a solution in such a short period of time, it also prevented that it becomes too political. Because now we do have the political discussions, and I think that's important and that's right. So we have to work through that and figure out whether it was the right decision or not. For me, I'm a little bit worried about what lies ahead of us, because now with Credit Suisse and UBS becoming one ultra large bank, and also in the US we're seeing this development where, like, as I mentioned before, a lot of people moving to the big banks and they're becoming even bigger. I mean, we will be confronted eventually with a situation even worse than back in 2008. And I think that should also put into our minds how important it is to do the due diligence when banking with certain financial institutions. Of course, I mean, if anything happens, chances are, or the odds are, that the big institutions are too important to let them fail, even though we have a too big to fail regulation in different places around the world. It didn't work out yet, and we don't know whether it will. But if you have a bank you're banking with where you feel comfortable, where you have either directly a contact or through your asset manager who has very regular, frequent contact with the bank and can manage everything, I think that is worth a lot.
Yeah. I think that's part of it. I think what it's put into perspective on a deeper level is not just selecting a bank based on its name. You know, actually, even just for my personal accounts, just savings accounts, not even looking at investing accounts, but as you mentioned, it was, am I going into a bank that I can trust, that I will feel comfortable with, that takes care of my needs, that offers the things that I need in my financial situation. And maybe that changes over time, and maybe I have to do that due diligence more than once, or recheck up on that due diligence even at the banks that I'm at. Because Signature Bank was on the Forbes list of best banks in 2022, right? From what I remember, or 2021, at some point they were on the Forbes list of best banks. And we see not even, I think, 10 months after that Forbes posting, they're taken over because of liquidity issues and bad investment choices and too risky setups for what they had. And I think I think that just drives the point home of making sure that you're very purposeful in the actions of what you're doing when you're deciding on a partner for whatever situation that is, really making sure they're in a good place. And do you guys have any kind of final thoughts or things that we want to discuss before we wrap up the podcast?
Well, my final words would just be to build on what you just said, that it's essential to do proper due diligence, and that's what we have been doing for a very long time. We have always been extremely selective with our custodian banks, even for the past 15 years, where liquidity was very easily available and no one was really talking about a banking crisis. And I'm glad we did that, and this is my recommendation going forward: really be thorough in your due diligence when working with a financial partner.
Yeah, that's great. Urs?
I would also stress on what you just mentioned, that you have to repeat your due diligence. So because banks can change as well. I mean, Credit Suisse was a great bank for a long time, and at some point they started to change and take on more and more tasks which they didn't do before, which added more risk to them. And if you feel it how the bank treats you. If you're just a number, chances are that if anything bad happens, if they lose trust, people are just like moving the money away. But if you have some kind of connection and feel that you're an individual, a client which is valued, then you take the phone, you call them, say, look, what is going on? And then the chances are that you're not going to pull the trigger. And also a lot of other clients don't do that. And so this is also something which is very important for us when we work with custodians, that we have kind of connection where we can trust them, where we have like a relationship that builds up, and where we also can ask like more challenging questions than you would do otherwise.
Yeah, and I think those are beautiful thoughts to give out to our listeners as well. When they choose independent asset managers, I would apply those same metrics. How are you treated by your asset managers or your wealth managers? again, as we've said so many times, Jamie was on this podcast, it's a trust business.
Yeah.
And you have to be in good connection with the people you like, and the people you can trust. Cool. Thank you guys so much for being a part of this podcast. I'm excited to put it out, and I guess we'll see each other next time.
Sounds good.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.